Dear friends, welcome to Weekly View on Markets. Along with normal Weekly View on Markets, I'm going to have a special section on what led to the collapse of two financial institutions, that is Silicon Valley Bank and Silvergate Financials in US, and its impact on Indian markets and what investors should do. Let us begin with the weekly performance of the markets. Most of the indices closed in red. There was a huge fall in the markets on Friday due to the impact of the financial crisis in US markets. Nifty closed at 17,412 with a loss of 1.03%. Bank Nifty fell about 765 points with a loss of 1.86%. Mid cap index remained resilient, small closed with a small gain of 20, ended flat. Small cap index also closed with a minor loss of 11 points, ended almost flat at 9326. India VIX has gone up by almost 10% on Friday, indicating a kind of fear in Indian markets also on Friday. Now let us look at various sectoral performances. Most of the sectors were either flat or they were in negative. PSE index gained about 2%. Energy sector and oil and gas indices gained about 1 to 1.5%. Infrastructure and commodities sectors were flat. Realty sector lost almost 3%. PSU banks lost about 2.85%. Pharma and media stocks were lost about zero point 0.8 to 1.5%. So, especially the markets on Friday ended with big losses. The panic started after the market opened on Friday morning, and by afternoon, there was a total sell off in Indian markets. So, this was the impact of news from the US markets. Now, let us look at technical charts of Nifty, Bank Nifty, small cap, and mid cap. And let us see what the charts are going to tell about the market mood. This is the daily chart of Nifty index. The Nifty index has closed at 17,412 and it has lost about 1.03% during the week. If we can see the markets opened lower on Friday and closed with a cut of more than 1%. And if we look at the last candle, we can see that from the lower levels, buying is coming and market is pulling back. And at the same time, we are seeing resistance at the higher levels and there is selling pressure due to one or the other reasons. So broadly, market remains in a range. I have maintained the support and resistance lines of previous week. Market is still trading in the same range. So 17,200 to 17,300 for Nifty is a support zone and 17,600 now becomes a resistance zone for the Nifty. So Nifty is likely to trade between 17,200 and 17,600 for the coming week. Let us look at Nifty mid cap index. Similar is the case in Nifty Mid Cap Index. Despite all this gloomy sentiment in the stock market, the good thing, if you look at the price action, you can see that there is a lower shadow on most of the candles. That means the buying is coming in at lower levels, which is a good indicator that informed people are buying at lower levels. They are accumulating the good stocks at lower levels. So Nifty mid cap index is also likely to trade in the range of 30,000 and 31,000 in the coming week. Now let us look at Nifty small cap index. Small cap index is also trading in the range, and the range of 9,200 to 9,500 is likely to hold for the next week also. This is a chart of Bank Nifty index. Here also we can see 40,000 is the support on the lower level, and 41,000 and 41,500 is the resistance level. So market is likely to trade in the same range for the coming week. There may be a dip in the market as the sentiment is negative due to the developments in the US. So we may see a dip in the market in coming 1 or 2 days, and that dip would be an excellent buying opportunity. Now let us look at some of the fundamentals and economic indicators of the market. Economic indicators for Indian economy continues to be very resilient, and they are improving. The factory output data for the month of January is up by 5.2% as per NSSO data released last week. This shows that uptick in industrial activity. RBI Forex reserves is at 562 billions. Crude prices is stable at around $82.78 per barrel, and USD INR rate is also stable between 82 and 83. There is some change in the FII stance as far as Indian markets are concerned. So FIIs as well as DIIs have bought du- during the month of March. February they were the net buyers. FIIs have bought 14,363 crores, and DII have bought 6,929 crores in the month of March so far. So now let us talk about the crisis in Silicon Valley Bank and Silvergate Bank in the US. These banks were involved in special sector activity. They were not the normal banks which were catering to the general public. Silicon Valley Bank was mainly involved in funding startups, and we have seen a huge growth in startups in US, as well as the trend has also trickled into in India. And there was a lot of news, being many startups becoming unicorns. They are in uh, more than 10, 20 unicorns in a year and all that. So why this happened? The interest rate after COVID was very, very low, and in US it was almost zero. So, and there was a huge liquidity which was pumped into the financial systems by the central banks. So easy liquidity and very low or almost nil capital cost. So this huge money in the system was a boon for startups, and venture capitalists were pumping these money into the businesses, and these startup businesses on the back of easy liquidity and very low cost of funds started chasing growth, and it was a norm that many unicorns based on their turnover and their valuation, it was the order of the day that startups started becoming unicorns in a short period of time. But if you analyze those companies, they had very little or no profits. It was only the growth in the business or the valuation, and there was no bottom line. So for any sustainable business in the long run, the bottom line or the profits are a must. No business can survive in the long term without proper bottom line profit. So this factor was somehow overlooked both in US markets and also in to some extent in Indian market, like companies like Zomato, Paytm, Nykaa, all these were listed at a very high valuations and they were not making any profit. At the end of every bull run, there will be this kind of crisis in the financial system due to over leveraging and risk management problems. These companies paid very less attention to the risk management in the business and were chasing the growth at any cost. Due to the easy liquidity and low interest rates, the inflation started rising across many countries globally, and central banks have tightened interest rates very rapidly in last 1 year. In US, interest rates from zero have risen to almost to 5% in last 1 year. So these banks have invested in US Treasury bonds. When the interest rates have risen, the bond yields have risen and bond rates have fallen drastically. That means the valuation of the assets owned by these financial institutions have shrunk drastically during last 1 year. The funding of startups in US as well as in India have started drying up in last 6 to 8 months, and they have faced a liquidity crunch. Money, the venture capitalists wanted to withdraw money from the banks. This has created a liquidity crunch in the US financial institutions which were funding startup businesses. SV Bank came under the liquidity crunch and they had to sell more than 2 billion US bonds in losses. So this led to the crisis, and many people wanted to take out their money, and there was a run on the bank. The Silvergate Financial was involved in funding cryptocurrency, and we have seen meltdown of cryptocurrencies in last 6 to 8 months. These financial institutions, they were highly over leveraged and they were not paying proper attention to the risk management and also asset liability management. You know, similar crisis in India was faced by IL&FS in 2008. It was called a ALM mismatch, asset liability mismatch. Similar uh, reason seems to be the cause for this collapse of two US financial institutions. Also, it is believed that these institutions have involved in some fraudulent transactions. As per the reports, the insider information was used and the top officials of the banks have exited their mm, stocks from the market few weeks earlier before the crisis started. These uh, these instances of using insider information, insider trading, all leads to corporate governance lapses which have to be investigated. Now, whether this will spread to the whole banking system in US, will it affect Indian market? These two institutions were catering to sector specific needs. SVB was catering to the startups and Silvergate was financing the cryptocurrencies. So I don't think personally that it will lead to a full financial crisis in US. Whether it will affect Indian markets to some extent, the startup funding by venture capitalists may get affected. Already we have seen that many startups are facing fund crunch in last 6 to 8 months due to the liquidity being withdrawn from the system by the central banks. So this may continue for startups, but more or less the Indian banking system is well regulated, is in good health as of now, and I don't think any major impact will be there. There could be a sentimental impact in the stock markets for maybe few days or 1 week, and that dip in the market will be a excellent buying opportunity for Indian investors. But these investors will have to identify fundamentally good companies and invest in them. So this is all for this week. If you like my video, please subscribe to my channel, share with your friends, and you can put your comments. We'll meet again next week. Thank you.